नमस्ते दोस्तों। मैं हूं अंकित कानोडिया स्मार्ट सिंह सर्विसेज से। आज के हम वीडियो में हमारे पिछले वीडियोस की तरह फिर से एक कंपनी के बारे में बात करेंगे और डीप डाइव करेंगे टू अंडरस्टैंड द बिजनेस ऑफ कार ट्रेड टेक। जहां की लास्ट 2-3 महीनों में मैक्सिमम कंपनीज के शेयर प्राइस 20-30% से 50-60% तक गिर चुके हैं। ये एक कंपनी है जिसके शेयर प्राइस स्टिल वेरी क्लोज टू इट्स ऑल टाइम हाई। तो इस कंपनी के ऊपर हम लोग आज डिस्कस करने वाले हैं। लेकिन उसके पहले मैं एक डिस्क्लोजर दे देता हूं कि ये कंपनी का जो वीडियो हम लोग देखेंगे ये 3 साल पहले बना था, जनवरी 2022 में। जिस समय ये वीडियो बना था उस समय मैं इस कंपनी में इन्वेस्टेड नहीं था और ना ही हमने हमारे एडवाइजरी कस्टमर्स को रेकमेंड किया था। लेकिन ये वीडियो बनाने के महीने 2 महीने बाद मैंने भी अपने पोर्टफोलियो में लिया और मैंने अपने क्लाइंट्स को रेकमेंड भी किया था। तो आप ये चीज़ जरूर समझिएगा कि हमारे व्यूज इस कंपनी को लेके थोड़े बायस्ड जरूर हो सकते हैं। इसलिए आप इसको एज अ रिकमेंडेशन मत समझिए, बट आप ये समझिए कि इस वीडियो के कारण आप इस बिजनेस के ऊपर आपको जो बहुत डिटेल में मेहनत करनी पड़ती शायद कुछ कम करनी पड़े अगर आप ये वीडियो देख लें। उसके अलावा एक इंपॉर्टेंट बात यह भी है कि क्योंकि ये 3 साल पुराना वीडियो है, मैं आपको ये भी रिक्वेस्ट करूंगा कि हमने इसके ऊपर एक डिटेल ब्लॉग लिखा था मार्च 2023 में। वो ब्लॉग भी मेरे हिसाब से काफ़ी हेल्पफुल रहेगा और उसमें काफ़ी कुछ अपडेट्स भी थे कंपनी के बारे में, तो वो भी जरूर पढ़िए। लेकिन इवन मार्च 2023 के बाद कंपनीज में काफ़ी चेंजेस हुए हैं, कंपनी ने एक नई कंपनी को एक्वायर किया है। तो ये वीडियो इज नॉट द एंड बट अ स्टार्टिंग पॉइंट ऑफ योर रिसर्च। सो आशा करता हूं कि आपको हमेशा की तरह ये वीडियो भी पसंद आए। So a very good evening to all of you who have joined. And today it is our Mission Smile webinar number 11. I am Ankit Kanodia from Smart Sync Services. And along with me, I have Karan, and I think Akhilesh would be joining in some time from our. Let me just start by giving you a brief snapshot of what we have done till now. If you recall, or if you have been following us since last 1 year, we try and cover those businesses which are having some sort of a runway or some positivity, where we believe that
अपन को आधे घंटे के बाद फोन करिए ना, मैं 6:30 अभी आप
sorry, I muted all because there was some background noise from someone. So so basically, uh, in March April we discussed about companies like Apcotex and Tata Consumer. Then in May we discussed about the travel companies. And at that point of time, a lot of new age IPOs were coming onto the market, but we didn't cover any of them because at that point of time, we didn't find any margin of safety. We didn't find any kind of valuation comfort, or we thought that it's better that since it is a new area and new industry, let's spend some time, let's look at them and then go for it. So even though last 1.5 years there have been a host of IPOs in the new age businesses, still more or less all of those IPOs are very richly priced according to our understanding. At least we can't wrap our head around the valuation metrics at which they are trading at now. But there is one company which we are going to cover today where we believe some sort of a valuation comfort is now appearing, right? So that is why we thought that now it's a good time to look at some of these companies. So that one company which we are talking today about is CarTrade. And let me start again with a quick disclaimer. Whatever we discuss, it is purely from an educational point of view. Even though the companies which we have discussed in the past, some of them have done have done really well in terms of the stock price appreciation. We don't try to recommend stocks through our webinars,
And you would have, if you follow us on Twitter, even on Twitter, we don't claim like we did a webinar on this date and then the stock has multiplied. We don't entertain or indulge into these kind of activities, because our purpose is basically to deep dive into a business or an industry and then try to uh, have a healthy discussion so that we learn together about the company. So with this, we'll start this webinar. Let me just share my screen. Actually, it's 11th webinar. By mistake, I have kept it 9th by mistake. So it's Mission Smile 11th webinar, CarTrade Tech. And we'll try to answer these three questions. Can CarTrade Tech become a modern monopoly? What do we mean by a modern monopoly? Where you basically become a platform business and you benefit from network effects, and your balance sheets are asset light and you don't need too much capital to grow. The second question we are trying to answer through this webinar is, does a steep fall from the listing price makes the valuation attractive now for this company? And in the end, we'll try to cover some of the key risks which we should watch out for if we are looking to invest in a company like CarTrade Tech. So we'll start with some sort of a unpopular thing. So all these three gentlemen, they have a very good fan following on Twitter, and we are not trying to be critical of them or trying to say that they are wrong or we are right, but we are trying to prove some mental model which actually works in the market or in marketplace, whatever we call. So just for example, look at the first tweet. Here he says that what gives the confidence to companies who are losing money on their core businesses to invest in other businesses losing money? The same is seen in Zomato, Policybazaar, FinTech. At least IndiaMart makes positive FCF and is not dependent on the whimsies of stock market investors. And the picture which the gentleman has attached is of CarTrade, wherein CarTrade basically announces that they are going to invest or prepare themselves for more acquisitions. As an investor, if you are, what we are trying to portray through these examples is, we are all prone to authority and anchoring bias. Now, we'll cover this in our subsequent slides, but if you go deep and see, CarTrade is not losing money. It is actually a profitable business, and they have more than 800 crore of cash lying in their books, right? So some things which are available to you just because it is easily available and it is being said by someone with an authority or someone with a lot of followers who say anything with an authority, you tend to get influenced by them. In the second tweet, this gentleman says that entire IPO was an offer for sale and it's down 50% from its listing price. Sales 92 crores, valuation IPO 9,000 crore, margins 5.32%. So factually he's right, but again he's anchoring you to that part of the story which will influence you to ignore the whole business. And in the third, though I don't, this gentleman says, though I don't understand valuations, I do believe a Zomato or Nykaa can become a profitable company. I don't have similar opinion for, say, a Paytm or CarTrade. Let me just repeat again. We respect all these three gentlemen. And in fact, some of the things which they write on Twitter are really good stuff and we learn from that. But we always try to have our own independent mind, and we try our best to not get into that authority bias. So I hope that once today's presentation ends, we will probably tend to disagree with all these people who we have a lot of respect for them, but we believe that on this topic, they are probably not uh, doing something right. Okay. And this is what a celebrated investor, Ian Castle, says: when the market goes higher, FOMO kicks in and makes you want to buy. When the market moves lower, it scares you and makes you want to sell because you don't want to lose what you have. The market never screams at you to do the right thing, only the wrong thing, right? If we go back in March 2020, everybody was thinking that market is going down and we should sell, or everybody was scared. We were scared to buy. And when we look back now, we think that it would have been better if we would have put in more money at that point of time. That is how market tricks us, right? And what does Seth Klarman says? We regard investing as an arrogant act. An investor who buys is effectively saying that he or she knows more than the seller, and the same or more than other prospective buyers. This is the price chart of CarTrade Tech. And you can see, if you think of buying this stock today, in Seth Klarman's words, you have to become an arrogant investor, wherein you have to think that probably the market is not understanding something which you might be understanding more about the company, right? Now let's take a step back and try to understand what CarTrade Tech is all about. So this is the journey of the company till date. So they formed the company in 2009-10, and with a series of acquisitions, specifically in the last 3-4 years, they have scaled up their ecosystem. Why I'm saying they've scaled up their ecosystem and not revenue? Because even at today's juncture, company is not producing a very high amount of revenue, but their ecosystem is becoming bigger and bigger, wherein we'll cover in the subsequent slides. You will understand that there are more users coming into the platform, and there are more transactions taking place. And eventually, the number should also come. That is what I or our team understands. So what are their service offering? So if you can see here, 2016, they acquired Car Wale, Bike Wale, and then they acquired Adroit Auto in 2017. And in 2018, they took 55.4% stake in Shriram Auto Mall. We'll cover all these things in detail in the subsequent slides. So what are their major service offerings? They offer auctions for car, auctions both in online and offline mode. Offline mode through the Shriram Auto Mall route, and the online they have their own exchange. Marketplace for new and used cars, used vehicles, ERP tools, marketplace for new and used two-wheelers, inspection and valuations, and auctions of CVs and other means equipment and construction equipments and so on and so forth. Some of the high-profile investors who are invested in the company, we can see that Warburg Pincus and Temasek. Then we have Malabar. So this is how their platform looks. Okay, all these products or offerings, you can see this is how they look like. Some facts about the company. It is currently #1 car and two-wheeler auto portal in India. And it is also the only profitable player in the country or in the industry. They have 31 million average monthly unique visitors. This 31 million visitors is a big number. And if you're a platform, this is something which you are looking at. And something which is even more interesting for them is 86% of those visitors are organic. And what do we mean by organic unique visitors? These visitors come on their own on the platform. They don't need to be paid or incentivized. It's just the platform's utility, which is attracting these 86% of the total visitors coming onto the platform, right? Now let's look at the organizational structure. So the main company is CarTrade Tech. It has investment in Shriram Auto Mall Private Limited. And then Shriram Auto Mall has investments in 3 companies. One is Adroit Inspection Service Private Limited. This Adroit Inspection Service basically does all sort of inspection and valuation. CarTrade Exchange Solution Private Limited is the platform on which online auction gets done. And then there is Ogyo Asset Management Private Limited, which offers asset management and other services, financial services to other companies. And then there is a CarTrade Finance Private Limited, which is also a 100% subsidiary of CarTrade. So these are basically the broad business segments. Let's understand each and every segment one by one. Number one is the Carvale and CarTrade, which was acquired in 2016, and it is the new and used car platform. Then there is Bikewale, which was acquired again in 2016. This is for 2-wheelers. Samil is the Shriram Auto Mall business, which is the leading auction player in India. In fact, nobody comes even closer to Shriram Auto Mall in terms of the auction market. And in auction, they do a lot of things, like they not only auction cars, they auction 2-wheelers, auction CVs, and auction all kinds of equipments, auto equipments as well, right? Then there is CarTrade Exchange, which is the ERP platform for vehicle auction. This is for the online mode of auction. These are used by consumers, sellers, dealers, and fleet owners. Then the AutoBiz is the segment where the CRM tool for new vehicle dealers. So the vehicle dealers are an unorganized group of people. They don't have the sophisticated tools or organized tools to carry on their business. So what CarTrade does, they offer them their CRM tool and also help them to manage sales lead generated from the customer's inquiry on their platform, right? Then there is this Adroit Auto, which we discussed in the previous slide also, which does all the on-site inspection and valuation. And even just if you look at the FY21 numbers, more than 7 lakh inspections were carried on by Adroit Auto. Okay. And then in the end, this is their Ego Asset Management, which basically into asset management, NPA management, e-auction of financial and other assets, and professional services of liquidation and restructuring. Okay. These are the segmental revenues. As we discussed at the start, the revenues are still not too high in number, but they are growing. So as you can see in FY21, the fees from auction and remarketing services was 142 crores. And for the 9-month period only, they have already achieved 133 crores. And if you compare that with the online ad lead generation and tech-based solution, which is for their new car business, it was 88 crore for the whole year last year. And in the current year, in the 9 month only, they have achieved 88 crore, right? So the key acquisition which they have made and at what value, you can see that Sriram Automall was valued at 156 crore. Adroit Inspection was valued at 13 crore, and Automotive Exchange was valued at 680 crore. Okay. Any question till now? Or shall I proceed?
Yeah. But I see they consistently made losses in their core business, right? And only their other income has made them profitable, right? So in a way,
We'll
yeah.
come to that part. Yeah. So you're right about the other income part, that the other income form a considerable portion of the profit, and but still.
And it is also being a falling knife. We don't know where the bottom is, right?
Of course, see, in case of falling knife, there is always a problem that you don't know where the bottom is, but that is how you invest in market. So you don't wait for the stock to again run up 2x from here and then you will look at it.
No,
right?
no. When it bounces back, you will get an opportunity to enter, right? It is not like you will it will continuously hit a UC, right? So you will get a point where it turns profitable, and then you get an opportunity, right? And then you will see their cash flows, profits and all with the supporting information, right? And the second thing is I have recently I have come across OLX Auto, okay, which does a free inspection and all. So, and also there are so many online platforms like Drool and other so many things. I don't know what is the interest in this particular business, but when there are too many players, isn't it the business gets diluted? Maybe the tech is no more a barrier for them. I'm not sure about.
This is a very good question, Gautam, and I'm sure you would be able to get answer to this in our subsequent slides when I'll compare the business of CarTrade with all the other platforms which are there. So most of your questions will be answered there. And only on the point of the falling knife and wait for it to recover. See, there are different ways to invest in market. We believe rather than looking at the price movements, we should try to look at valuations. So, and margin of safety as per our understanding. So if you find there is some value in it, you don't wait for prices to go up and then buy. You buy when you find the margin of safety. I'm not saying that it is we are not trying to promote the company or trying to say that this is a bargain, go and buy it now. But when the stock has come down drastically from its listing price, and if you find some merit in the business model, it is something which is worth looking at. That is what we are trying to convey through this presentation.
So is it not something market efficiency is at play? Like, there are best brains in the market who the market itself is efficient, right? It's not like before, right? So the market knew, Mr. Market knows everything about what's happening globally, all that stuff, right? This is not something hidden business, right?
So Gautam, let me just give you an analogy here. Mr. Market put Bajaj Finance price at 1800 in February 2000, March 2020 or something, in the near time in that period. And today Bajaj Finance is priced at 7,500. So what price do you think is the efficient market discovery?
See, first of all, it's into financial domain, which nobody can, only God knows the actual thing. Okay, the banks and finance, nobody can properly valuate. Second thing is it's a nifty stock, which is the main stocks, the utility for them to manipulate the nifty that everyone knows, Nifty 50 stock, right? It can jump to 10% in a day without any reason. Yeah, and so they have a magic going on anyway. Bajaj is a very super efficient platform, right? They use top end analytics and ML and all that stuff. they'll give you a loan in 30 seconds or 1 second, something like that. So they have all those edges, right? So we don't know the clear picture.
Bajaj Finance was one example. I can give you 10, 15 examples like that. The point I'm trying to make over here is this, that the efficient market hypothesis is something which is very difficult to prove in the short term. It can be proven in the longer term, but it is very difficult to prove it. If a price of a stock is rising in the short term, that doesn't mean that the company is valuable. And when the stock price is falling in a short term, that doesn't mean that the company is not valued properly. As in, that
Of course,
doesn't
we
mean
can
that
see who are the investors, the FIs and DIs, shareholding pattern, etc. We can see all that also. And it can be, it's not 1 quarter, right? Over 2-3 quarters, we'll understand the trend, right? Who are the big investors? Who believes in that business? Obviously, all these hedge funds and mutual funds, they have better brains than a normal retail investor. And I'm not Ashwath Damodaran to arrive at a proper valuation. Probably I may find margin of safety at 65 rupees than 650 rupees. A stock can correct 90% and further can correct another 90%, right?
Yeah, fair enough.
Sir, just one thing actually I would like to add over here. Just one thing, small thing. Actually, the promoter actually, Vinay, actually Sanghi, actually he said actually the auto business actually is in my genes. So that is that could be the key thing also actually, because actually he belongs to the Sa and Sanghi, actually fame actually, and he's the 4th generation. So I believe actually the promoter, the guy actually, the line, the auto business is in my genes actually, that was the key for me, to have interest.
Right.
Yeah, I completely understand. Probably that's why I find margin of safety at 65 rupees than 650 rupees.
Sure, Gautam. So we are not going to debate here which price is the right price. So maybe for you 65 is right. For someone else it could be 650, whatever it be. So our focus in today's presentation is trying to first of all understand the business, and then try to look at the valuation and see whether it looks interesting or not. And valuation exercise will be an open-ended exercise. We will have a discussion on that, and it is but natural that different investors will have different view on the valuation. So valuation is a very small part of today's presentation. So first, let's focus on what the business is all about, right? So thank you so much, Gautam and Kailash, for the questions. So let's begin. So this is just the valuation timeline. We'll cover the valuation in detail in subsequent slides. But here we have just put in some numbers to just try to understand. So this company was, so as Gautam was talking about high profile investors and all. So just before the IPO, funds like Malabar and all, they bought the company at 7,000 crore valuation. That was in April 2021. Then in October 2020, it was valued at around 3,900 crore. That was the H round of their funding. In Feb 2017, the G round of the funding, this company was valued at 3,000 crore. And today, after the listing, again the stock price suggests that the valuation today the market is giving it is 3,000 crore. We are not saying that 7,000 crore was the right valuation or 3,000 crore is the right valuation. We are just trying to say that at least one time, so at least something is wrong. Either the current value is the right value, or maybe the 7,000 crore was the right value. We don't know. But it can't be the value of a company cannot fluctuate so much. It is just the perception of value which is changing, right? So today, the public market valuation of CarTrade is equal to its private market valuation in 2017. Then IPO, there was no fund raised. It was 100% offer for sale. Now we hear this discussion among a lot of investor group, and people find it very, people have a very negative view on a company which goes for 100% offer for sale. Let me bring in another analogy here. Nestle or Asian Paints or Pidilite. These are companies which will probably never need outside capital. Okay. And there is a company, say in the construction domain, say a KNR Construction or any other, say L&T or GMR Infra, they are always in need of money. Whether they take it from the market or they take loans, that's a different matter. But they are always in need of the fund. Which companies are favored by the investors more? Naturally, the ones which do not require capital. And if you look at some great investors like Warren Buffett, they keep on saying that the best companies are those which do not require outside capital. They have their own capital and it is sufficient for them to continue growing for a long period of time. So another way of looking for 100% offer for sale is something like this, that the IPO came only for giving the exit to the earlier investors, and the company doesn't actually require cash, right? And if you look at it, the balance sheet, they actually have cash in the balance sheet, and they are in fact even today they are looking for new acquisition, right? So we would like to just dwell upon this point that just because a company has offered has come up with an IPO for 100% offer for sale, it is not right from our point to be judgmental on that company. Of course, if the valuation is not attractive, we may not participate in the IPO, right? But if the company is coming with 100% offer for sale, thinking that because it is none of the money is going to the company, this company is cheating the market, that is an opinion which we believe is not correct, right? Now let's look at, in the subsequent slides, we'll just look at the customer experience. Anyone who comes to their platform, what kind of experience they see. Okay, so the new car recommender, if you come to their platform, you will see what is the budget, what will be the body type, then you will be shown the result, and based on that, what model you decide. Okay. Then comes the car reviews. You will have so many people giving reviews of the car. After that, you can also contact dealers. You will get the information about dealers. You can share your name and number, and based on that, the dealer can also contact you. Then the used car research and lead generation. This is for you can just type in the city where you want to look for the car. In fact, you can all try online also. Even if you don't have their app, you can try online. So I just search in case of Ahmedabad. So there were more than 3,000 cars in near Ahmedabad, which was available. So basically in Gujarat, which was available to be bought from their platform, through their platform. Then in case of auto finance also, you just have to fill in the form and details. Then you get a call from the finance companies with which they have tied up, and they will offer you loan for the car if you are looking for. And if you want to sell your car on their platform, this is the way they offer it. You can post just like some of you would have already tried on the OLX platform. That is what they do here also. Now comes the auction part. So in auction, there are two ways. One is online, which you can see here, and the other one is offline. So I'll just stop here and I'll just share a video, which I believe you all may like. Can you hear the video? Can you listen to the voice?
No.
I'm just starting the video again. Is it audible now?
Yes, yes.
Okay, so I'll just start again.
सर से जानते हैं कि इस नीलामी में भाग लेने के लिए क्या क्या नियम हम करते हैं। सर मोर कंडीशन में आपका स्वागत है। हमारे दोस्तों को अपने शुभ नाम बता दीजिए। सर नाम नितिन शाकुंतराठी है जी। काम करता हूँ जी। नितिन जी, अगर हमारा कोई दोस्त इस नीलामी में अगर हिस्सा लेना चाहता है तो उसकी नियम एवं शर्तें क्या होगी सर? इसका निजी प्रोसेस है यहाँ पर जी। आप फिजिकल ऑप्शन यहाँ पे हमारा रहता है जी सर। तो आपको कुछ नहीं 20,120 रुपए लेके आना है जी। आपका 20,120 रुपए काउंटर जमा होगा, आपका केवाईसी रहेगा, मोबाइल नंबर रहेगा जी। उसके बाद आपको बिलर आईडी मिलेगा। बिलर आईडी के बाद आप ऑप्शन में पार्टिसिपेट कर सकते हो। इन केस आप गाड़ी नहीं लेते हो तो आपका 20,000 रुपए आपका रिटर्न हो जाएगा और 120 रुपए आपका पार्टिसिपेट चार्ज है जी। सर अगर हमारा कोई दोस्त अगर इस नीलामी में हिस्सा लेने के लिए अगर 20,120 रुपए के साथ अगर आता है तो उसके लिए आईडी प्रूफ वगैरह भी अगर कुछ जरूरत होगा? आधार कार्ड, पैन कार्ड और मस्ट जी। आधार कार्ड और पैन कार्ड से अगर कोई भी आता है। और सर ये छत्तीसगढ़ से या फिर छत्तीसगढ़ के बाहर से अगर कोई भी आएगा? कोई भी सर, यहाँ पैन इंडिया से कोई भी आएगा हमारे ऑटोमोबाइल से जुड़ सकते हैं। लॉट नंबर 1 2012 का टाटा केस पिकअप। लॉट नंबर 1 70,000 70,000 70,000 70,000 65,000 65,000 65,000 65,000 60,000 60,000 60,000 60,001 60,000 60,000 60,002 लास्ट।
I hope you got an idea as to how the auction gets done on the Shriram Auto Mall in the offline mode. So as on date, most of the auctions being done in the offline mode only, but they also have an online interface where they believe in the times to come, they can see a lot more activity. This is how the auction interface looks like. Now, as we discussed in the earlier slide, average monthly users, unique visitors, that is one of the most important metric for them, because these visitors are only the people from whom they can sustainably earn revenues. So you can see consistently more than 25 million visitors coming onto their platform every quarter, which is a healthy sign, right? And as mentioned by them and as claimed by them, more than 80-85% of these visitors are organic visitors, where they don't have to pay these visitors to come to their platform. So this is what they are trying to do. They have two-wheelers, new cars, used car and services in the consumer group. E-marketing may they do retail auction, business auction, trade-ins and inspection. And in the used car space, they do not have the inventory model. So they don't carry inventory in their books. Rather, they go for a franchisee model. And this is something they have started recently. And they have franchisees. So those franchisees take the inventories in their books. So that makes CarTrade a completely marketplace, wherein they don't have any capex to do to grow from here, right? Then there is this CarTrade Finance Auto platform. Again, this is something which they have built in, but there is not much activity going on at the current juncture. This is something which they would like to develop in the future, right? And then there are software services and also other services like ownership, rideshare, connected vehicles. So this is what the ecosystem they are talking about. And if you look at their presentations or if you look at their last two con calls transcript, they keep on giving this direction, that on this direction they are trying to move, wherein the whole Indian auto ecosystem can be a part of their platform. OEMs, banks, insurance companies, fleet owners, leasing companies, dealers, consumers, both types of consumers who are looking to buy vehicle, and consumers who are looking to sell vehicles. So that is what they are trying to achieve. Now let's look at where the industry is. So if you look at how India fares compared to other large nations, so India has a 2.7 million passenger car registrations. Okay, and look at the other countries. Look at China, look at US, look at Japan. The new market size of the new car market size of India is $50 billion, and it is expected to reach to around $90 billion. And in the new car online platform, CarTrade has 40% market share. It's still a very small market size. The market is very small, but they capture 40% market share of that market. So over here you can see the two-wheeler sales by volume and new car sales by volume expectations in FY26 from the current level. So 8 to 10% CAGR growth we can expect. So something which I learned recently is that the used car market is far bigger than the new car market. So as you can see, the used car sale is around 4.4 million units, whereas the new car was around 2.7. And this segment is expected to even grow further to 8.3 million units in FY26. This is the ratio of used to new cars sold in India. So again, in India, this ratio is much lower compared to what it is in case of other countries like say Germany, Japan, Russia. Look at USA and China. In case of China, it is 21 times, wherein in India, so what does 21 times? So for one new car, 21 old cars are sold in China, right? But in India, it is only 1.5. Okay. And on the right side, you can see park turn, used car turn percentage. So what is park turn? So park turn is the number of vehicles changing hands each year relative to the size of the country's car population. So in India, it is again 16%. But when you look at UK, it is on a higher side. This is what the auto ecosystem looks like. There are new vehicles, there are used vehicles. In the new vehicles and used vehicle, you have transactions, you have media, you have software services, you have other value-added services. Then in media, you can go for ads and lead generation. So these are all the different ways to earn revenues for a company like CarTrade, right? So you can see on the right side, so many different ways they can earn revenue, and they are already doing, say for example, ads and lead generation, they are already doing. Accessories, still a very small part. C2C, C2B, these are all fancy terms. Basically, these are all different ways of in which the used cars are sold through the platform. But used car, in case of CarTrade, is a very smaller business currently compared to the new car business. Now let's look at the competitive landscape. So I've tried to put CarTrade alongside all the major competitors in the market today. And the competitors are Car24, CarDekho, Mahindra First Choice, and Droom. So Droom has already filed their DRHP, I don't know why when they are going to come up with an IPO, but in November sometime they actually filed their DRHP. So you can also check their DRHP. It is also, but most of the content of their DRHP matches with what is there in CarTrade. So you will see a lot of overlap in terms of the industry and business section. So if you look at the revenue, see, CarTrade has only 300 crore revenue, whereas Car24 has 3,000 crore and CarDeco has 750 crore. Right? So you must be thinking that CarTrade is a much smaller company in that sense. But when you adjust for the purchases and inventories, the adjusted revenues of CarTrade is almost at par with Cars24 and CarDeco, and even higher than Mahindra First Choice. So there you will understand that the business model of CarTrade is different from Cars24 and CarDeco and others. How? Because they do not carry any inventory. They don't purchase vehicles and then sell it. They are purely a marketplace, right? Even in case of the A&P expenses, you will see CarTrade doing a much lesser A&P expense compared to its competitor. And EBITDA margin, as you can see, it is a positive EBITDA margin of 18.6%. So I've taken FY20 numbers because it was difficult to get the FY21 numbers for other competitors because they are not listed. So over here we have taken only FY20 numbers. But the same thing continues in FY21 as well, because Car24, CarDeco are still loss-making companies. So this is how it is. In case of new car ad generation, they are the number 2 player, 40% market share. CarDeco being the market leader there, which have a 50% market share. In new car, Cars24 and Mahindra and even Broom, they don't have any presence. In used car subscription, CarDeco is having a very strong market share along with OLX. So OLX has been there for a long period of time, and so is CarDeco and Cars24. So in used car, CarTrade has recently begun their activities, and they are going through the franchisee route. Again, how that will pay out, only time will tell. But at least through franchisee route, they are not burning cash. Their working capital is intact. They don't have to spend too much money. Let's see how it goes on. In case of used car transactions, they always enter through the franchisee model. In case of Car24 and CarDeco, they have an asset-heavy model wherein they purchase on their own and then sell to the customers. In auction, that is the biggest advantage of CarTrade today, because in auction they have a profitable business by the name of Shriram Auto Mall, and all the other competitors do not have any presence there. So that you can, in some ways we can say this is probably the biggest moat for CarTrade, because they already have a profitable business which has a, say in case of Shriram, they are into this business for last 20 years. So, and the auto mall was launched, I think, in the year 2011. Shriram has already been in the used vehicle market for more than 20-25 years. And the auto mall was formed in 2011. And none of the other players have any presence in that auction market. And auction market in India is still at a very nascent stage. We believe that this can really grow much faster. Right now, most of the auctions are being carried out by the banks and the insurance guys, because say someone buys a vehicle and defaults on the EMI, the bank has nothing to do, but they have to auction that vehicle. Otherwise, how will the bank or the financial institution recover their money? Same is the case with insurance people as well. But we believe going forward, once the economy matures, once the market matures for the auto industry, we will have private players also actively participating in the auction process. Now let's come to the financials. So I think someone mentioned about it. I'm forgetting. I think Gautam was there who pointed at this out. So you are right. You can see there the other income forms a big part of their total revenue and profit. So, and the company has done some adjustment in the sense that they have taken other income as a part of EBITDA, which is not the right thing to do. And in fact, in the recent con call, some of the analysts even asked them, why are you taking other income as a part of your EBITDA? They couldn't offer any convincing answer. So yes, we can definitely say that this EBITDA margin, which 32% they are mentioning in their presentation, this is not the real EBITDA margin, because you can't take the 13 crore income, other income, which is there in the December quarter, or if you take the 9-month, it will be the 33 crore other income should be deducted from the EBITDA number which they are showing. So if 65 crore is the adjusted EBITDA they are showing here, the actual EBITDA should come to around 33 crore. But still, even if you counter that, even then it's a profitable business, right? It is not a loss-making business. Yes, they have inflated the EBITDA margin by including other income, but you can't say that this is a loss-making business. And most of the people who are saying it is making loss, they are ignoring the fact that the loss is coming primarily because of the ESOP. This one-time ESOP which they issued and which got vested in this particular year has been a large amount. So the company expects somewhere around 180 to 185 crore of ESOP vesting in the current financial year. But if you look at that number for the FY23 or FY24, it will come down to 20 to 25 crores. So that is how the number will drastically change for the next years. So that is why it is incorrect to term this company as a loss-making company, because this ESOP is a non-cash expense. And even though it is an expense, we don't say that this is not an expense. And this is a one-off thing. These kind of ESOPs is unsustainable for a long period of time, right? And then finance costs, they don't have any finance cost in the terms of interest cost, but they have some lease liabilities. So those are included in the finance cost. This is the growth you can see in their revenues and EBITDA. If we just try to understand and segregate how much they are making through the new vehicle business, through the used vehicle business, through SAMIL, you will see that the bulk of the revenues is coming from SAMIL. And that is where they have an edge over their competitors, because this is something which is very, very, very difficult to copy. Even if you have the VC money, it is very difficult for you to have that kind of a setup and different outlets like the Shriram Automall has all over the country. So 157 crore of revenue has been achieved through SAMIL in the FY21, and only 8 crore of revenue has been generated through used vehicle. So while people talk about the competition in the used vehicle, we should understand that currently CarTrade derives less than 20% or less than even 10% of their revenues from the used vehicle business. And they have a market leading position in the other two vertical, which are the new vehicle and the SAMIL. So that is where we should understand and try to see if the market in these segments, like the new vehicle online market and the auction market, both online and offline, if this has to grow, and if CarTrade continues to maintain its leading position on both fronts, they have a very good runway ahead. Now, what could be the reason you should look at investing in a company like CarTrade is the digitalization of the auto ecosystem. We are at a very, very, very nascent stage of digitalization in the auto ecosystem. So most of us still buy a car by going to the showroom, and digitalization is still some time away. So the kind of growth this can achieve is very hard to predict today, but 5 years down the line, you can expect a good amount of revenue coming through the digital, good amount of transactions happening through the digital medium. Asset light model, obviously we have discussed in the earlier slides that most of their competitors have a asset heavy model, but they focus on a marketplace model wherein they are completely asset light. Strong hold in the auction business, we have already covered that also. Then they have the franchisee model in the used market, and then long-term growth trends in auto market in India. So we should understand that since the last 4 or 5 years, the auto market is already in doldrums. So we are somewhere near the, in fact, if you look at the industry experts and their views, auto market has probably seen their worst and is slated to turn around. When it will turn around and how far it will go, that is anyone's guess. But we are looking at from a 5-year, 10-year, 7-year view. You can expect a good long-term growth in this whole market, both in the used and new space. This is how the India online auto market basically looks like. The vehicle transaction market is around $119 billion. After sales, which includes the accessories, parts, and servicing, that is a $15.4 billion. Then ad spends, auto finance, auction remarketing, auto insurance, inspections, and valuations. So these are total, and if you add all those up, so it is currently a $10 billion revenue pool, right? So if we turn to the numbers or the valuation, the current market size is around 75,000 crore. The auto online auto market size. Now in that, let's look at the situation of the auto industry today. It is very, very reasonable to assume that the volume growth of vehicles over the next 5 to 7 years could be around 10% or even more than that, right? Because if you look at the last 5-6 years, they have been in a bear market, and once the recovery happens, 10% CAGR when the economy is growing is expected to grow at somewhere around 7 to 8%. Auto industry, which is a cyclical industry, has all the chance of growing at 10% plus CAGR. Now, value growth. Look at the price of vehicles today. And given that we are entering into a inflationary environment, it is very reasonable to assume that the price of these vehicles, say 10 years down, would be somewhere between 1.5 to 2x, right? So say for example, a Maruti Dzire, if it is available at say about 6 to 7 lakhs today, it is fair to assume that it will probably be will be priced at somewhere between 10 to 14 lakhs, 7 to 10 years down the line, right? So the current market cap of a leading player in this space is 3,000 crore. And at the current valuation, you get 800 crore of cash in their books, which can be used for acquisition. A profitable SAMIL business, undisputed leader in the auction business. FY21 revenue was 157 crore, EBITDA 35 crore. Then they have the new vehicle online business, in which they have a 40% market share, which is a very niche, nascent market as of now. And at this juncture, what valuation would you be interested in? So as Gautam mentioned of a number, we are not trying to say that 3,000 crore is a very exciting or it's a very mouth-watering valuation, but 3,000 crore doesn't also look like a very expensive valuation for a new age company, which is completely digital marketplace, and it has all the potential to become a full-fledged platform, right? Where you get some margin of safety in terms of a profitable auction business, cash, and a very good market share in the new vehicle online business. Now let's look at some of the similar players internationally. How are they valued today? So these valuation numbers which I have put in is today's current valuation. If you would have looked at their valuation, say a month ago, the valuation would have been even higher, because in the last 3 months, in fact, last 3-4 months, all these companies have actually saw their market price collapsed in the US. Look at these companies like, say, Carvana, CarMax, Auto Trader, Car Sales, and Copart. So Car Sale in Australia is a marketplace. Now, look at Australia. Australia, both in terms of the auto market and also in terms of the stock market, is a far smaller market compared to India. And in Australia, this marketplace company is being valued at $6 billion. Okay. So that is the kind of opportunity you can see this kind of sector has. In India, it is difficult to envisage this today, because in India, this market has not been developed yet. It is still at a nascent stage. But look at the valuation these companies have got. So Carvana is an inventory asset heavy business. They have $25 billion market cap. So I'm not saying CarTrade is going to be a $6 billion in the next 3 to 5 years, but it is something which is what happens all around the world has a higher odds of getting repeated in some way or the other in your own country as well, right? Because the way these businesses work there will also work here as well, right? Look at this Copart, which is an auction platform. That auction platform is today worth $30 billion, right? So with this, now we have talked about all the positives. Now let's look at some of the negatives or some of the things which we don't like about the company. So number one on our agenda would be their management. Even though the promoter has been with the company and he is a very hands-on guy with a very good experience of the auto industry, but we are not very convinced with the other people on the board and in terms of the depth of the management, because in the last 2 calls which the company has posted after getting listed on NSE, the kind of answers the management is giving to the analyst community suggests that the management bandwidth is not too great for the company. Okay, and then there are some other risks which we would like to highlight. So, see, in future everything looks bright. When I'm talking about the auto industry doing well and then digitalization happening, everything looks rosy. But today, sitting here, we don't know in 2022 how quickly this digitalization will happen, how quickly the auto industry will pick up, and how this whole competition will pan out. So right now, the other competitors are not into the marketplace mode. They are more into the asset heavy model. Who knows if they want to enter into this domain, and they also have raised a sufficient amount of capital from private investors, so they can burn cash even though they are non-profitable, but they can still burn more cash and become a problem for a company like CarTrade. Then again, the franchisee model which they talk about, it looks good on paper in the sense that your books will be free, your working capital will not be tied up, you have a better balance sheet, everything is good. But they have just started this thing. How this pan out? Will the franchisee find the model lucrative for them? Because until and unless a franchisee find the model lucrative for them, the success of CarTrade cannot be ascertained, right? And then the last one is, which is the most important part, is retention of users on the platform. So platform business has this peculiar characteristic that user can anytime leave the platform and join some other platform. So you have to do some sort of, you have to offer some sort of a utility or benefits to the users, which hook them to your platform. Otherwise, shifting from one platform to another platform is very seamless for a user, right? So the biggest risk, in our opinion, is obviously execution. What they convey through their presentation and plans, how they will execute is something which is the biggest risk. If they can't execute properly, all this discussion of valuation, market size opportunity, comparison with the international peers, these all goes for a toss, right? So with this, we come to the closing. So I'll just like to read this passage from the book Modern Monopolies. Platform struggles with early growth are the result of what economists call a coordination problem. If everyone on each side of the network could coordinate their behavior, they could all agree to join the network and everyone would benefit. But in practice, this almost never happens. That's where a platform's management of its network comes in. This coordination problem must be solved by incentivizing users to join. The main way platforms do this is by subsidizing participation for one or both user groups. In this way, the platform can get early users to join even when the value of the network is relatively low. The platform and its investors are betting that the eventual value of the network will exceed the cost of building it through subsidies. Once the network reaches maturity, it will provide enough value on its own that participation will no longer have to be heavily subsidized. Now with if you take CarTrade's example here, they also have to make sure that at one end they need to incentivize the dealers, and then the other end they also need to incentivize the customers who are either buying or selling their vehicles on the platform. Until unless they manage to incentivize and subsidize their participation and make both sides of the platform healthy enough, you cannot be sure of the success of this platform. We have several examples of so many platforms which came and only few stayed. Those who stayed had this thing worked out really well. So some of the good examples of platforms would be something like a Facebook, right? Or maybe a Uber, right? So with this, we come to the end of today's presentation. Now we are open for Q&A. If anyone has any question, let's discuss.
Yeah, Ankit, this is Amar. Am I audible?
Yeah, Amar, please go on.
Yeah, Ankit, in one of your slide, I think 4 slide back, you
Mhm.
mentioned that CarTrade has new car ad spend of almost 40%, which is number 2, right? So what is that exactly? What does new car ad spend means?
Sorry, can you repeat your question again?
It was with reference to one of the slides, Ankit. So there you said uh, new car ad spend. I think that is what I got. They are having 40% share over there.
They are having 40% share in the new car market, new car online market, wherein in that market, what they do, they uh, they generate leads and pass on the leads to the dealers, and they also let the OEMs advertise on that platform. So in that market, they have a 40% market share.
So when you say 40% market share, in the sense OEM will be spending that on their platform, is it?
OEM only spends on the advertisement part. Yeah.
Okay. Okay.
Yeah, Abdul, you can go ahead.
Ankit bhai, thanks for the presentation. Excellent presentation. The thesis is basically we are betting on the Shriram Auto Mall will act as a cash cow and will provide and the growth from the other two verticals, and it will feed that growth. I would just like to know how they are planning to have a growth in Shriram Auto Mall also over the years, whether their revenues and profitability has grown over the period. That's one. And in other two models, what's the operating leverage is the phenomena going over the period. That's second. And third is ESOPs at what rate they have been allocated. And as I understand about ESOP, most of the like 50% of the ESOP will come in first year, right? And the remaining will be over the whatever the period, 3 years, how much they have given over that period, 15 over that will be given. So in the next quarter, there will it will again come into place, right? And again, right, it may give a negative or results which market again can react to it. That's the risk is over there, right?
Right,
Okay.
right.
Yeah. So these were the.
So,
Yeah.
Avdut, first of all, thanks for the questions. I'll start with the third question first, the ESOP one. So the ESOP were allocated at, if I'm not wrong, it was around 865 was the price. So the current market price is even lower than the ESOP price at which it was allotted. Okay, so that was regarding ESOP. And we have already mentioned about the total quantum of ESOP for this year would be somewhere around 130 crores, 180 crores. And it will come down to around 20 to 25 crores next year.
Okay.
And what was your second question?
About Shriram Auto Mall acting as a cash cow and how it is growing over the years. Has it grown, and what's the plan of the company over there going forward?
Yes, so Shriram Auto Mall has grown, but it has its own challenges as well, wherein the auction market in India is still at a very nascent stage, and you only have bankers and insurance agents participating in that, right? So the private participation is still very low. So what company? When they joined hands in 2018, wherein CarTrade took a stake in Shriram, they are trying to mix the online and the offline part, because see, for a consumer like you and me, it is easier to participate in an auction online rather than going to the Shriram Auto Mall ka jo place hai, which we saw in the video.
Correct.
So that is what they try to incorporate, but still it is too early days to be very optimistic about ki kitna fast grow karega. But in the long run, say 3 to 5 years, I would not be surprised if there would be some decent growth in this auction market, because both will complement each other. Offline will complement online, and online will complement the offline. Okay.
You feel that's a scalable model, Shriram Auto Mall also, and whether it is offline or online, it's a scalable model.
No, it is only scalable when you are working in tandem. So to scale up the offline model is extremely difficult. That is why you don't have any other competitor in that space.
Understood.
Right?
Understood.
And what was your first question, Avdut?
And the last one was while feeding this growth, what's the business model over first two? Like volumes will like new car and used car, that will be done through platforms itself or the app or the site itself. So their volumes will drive the growth, right? So operating leverage part will be there, right?
Obviously, operating leverage will be phenomenal, but the catch here is that how it is not very easy to scale this up at this juncture, because there are other competitors who are very well. They have a lot of cash in their books, and they also have the physical presence. So they are trying to enter it in through the franchisee route. Now, how that will pan out is very difficult to say at the current juncture. But in the new car business through the online mode, they are already doing well, and it's showing good growth.
Okay. So and the last, sorry, this CAC to LTV, this ratio, whether it applies over here also, customer acquisition cost here is low, what we have seen in the, because the number of people getting, as you mentioned in the presentation, it's increasing, number organic growth is increasing. So that means the CAC is low, but we have to look at the lifetime value, how it is panning out over there. Any idea of that?
Sorry, Avdut, I have no idea there. We have to look, and we'll try to find out how to calculate that.
Yes, sir.
Understood. Thank you. Thank you.
Yeah. So Vikas, you can go ahead now with your question.
Hey, Ankit, I spent quite a bit of time studying CarTrade, and yet I could learn so many new things in your presentation. Fantastic stuff, Ankit.
Thank you. Thank you so much, Vikas.
Yeah, so I just wanted to add a few things. So first one is, so this guy was the founder CEO of Mahindra First Choice. So he
Yes.
founded it and ran it for nearly 10 years. And then he started in 2010. He started CarTrade, right? So, so imagine the irony of it is he started CarTrade at zero, and today it's valued at 3,000 crores, even at today's price. Whereas Mahindra sold Mahindra First Choice for 25 crores last year, right? So. So yeah, so everybody, so to answer what Gautam was saying earlier, everybody knows everything, but the reason we join forums like this is so that our analysis or our understanding could be little different from what the market thinks, and that could be our edge here.
Wonderful point.
So the other thing was, I just also want to share that about 3-4 months back, I bought a used car from Spinny. It's also another startup.
Right.
And the way it works is, if you go to a Spinny website, it'll look like a Flipkart kind of a website. It's very nicely done, and you can actually see. So they buy used cars. They do a 200-point check, and they will give you a report on each of the cars, right? Every scratch and how much of tread life is there in the tires, and every little aspect about the car they tell you. And they will bring the car to your house also for a test drive, and you can make a purchase online, okay, or offline, however, right? So it's as seamless as possible they've done, right? And I was reading a report which said that in Asian markets, we are now, so level 1 is more like, just an online classified kind of business, right? You just go put up your ad and so on, right? Level 2, which brings in more maturity, is like you have some conversion and so on. But level 3 is the Spinny kind of experience, which is like completely online, digital, seamless, frictionless kind of a thing, right? Imagine, so somebody like Spinny is saying that I will give you a 5-day, no questions asked, money back guarantee. You can drive the car for 5 days. You pay them the money. You drive it for 5 days, and you can say I don't like it, and then they will give you your money back, right? So this CarTrade, they have a similar product called AppSure, right? Which is what they launched with the through the franchisee model. And I see a lot of promise there because the more friction that you can remove in this process of buying cars, right? So of all the people in the car, I don't know, for example, I will say I know zero things about car. I know how to go from point A to point B, but I don't know anything about how the engine works and how to check for oil and all that stuff, right? So somebody who removes that friction for me in the buying process, it makes my life very, very easy, right? So I see a lot of promise and potential for that AppSure kind of product which they have launched. And there again, the smart thing that they've done is the inventory is not on their books. They are only taking about 1.5 to 3% kind of commission on the sale value, right? So this is fantastic. So there is no risk that CarTrade is taking, but they are taking the upside. So it is an asymmetric kind of bet for them.
Exactly.
And so I see a lot of this one. And Ankit, you mentioned that financing thing. That again is a fantastic thing because you can now, on the CarTrade platform, you can now, you can get a loan from one of the 9 banks that they have tied up with. Right. So there again, the risk is not on their books. They're not doing the credit underwriting, but it is on the uh, books of the bank. And then they will take a commission from the bank for doing that work. Right. So again, it's a fantastic business model. So high margin kind of a thing, low effort, high margin kind of a business. Yeah. So this was some of the things I wanted to share, Ankit. Again, excellent presentation, Ankit.
Thanks so much, Vikas. And this is the slide which I would like to again share. So this is how the whole ecosystem looks for them. So right now, even though they are making money only through SAMIL and the new car lead generation business, but look at the future which is possible through this platform. They can get a share on the financing part. They can get a share on the insurance part. They are helping with all the data which is required for all these players. And for a consumer, it is so heartening to see and so easy, like what Vikas said. If you see that the certification is being done, a proper valuation has been done, all the processes has been followed, then it makes your job much, much, much easier.
And yeah, just to draw a parallel, there was one company which looked at the whole financing scene and said that loans take 3 days to go through or not. We will do it in 30 seconds, right? And so it's all. So that was the thing, right? You remove friction in the process, and then you suddenly see a huge jump in growth. And that is what I hope that someday will happen in the whole buying selling process.
Yes, Vikas. So, Vikas, just one question since you have also worked on it. So, what is your view on the valuation front? So, we had a
Yeah, great question, Ankit. So think about it. They bought that car wale and bike wale for $100 million, right? And then they bought Shriram Auto. So somebody, I think Avdut asked about Shriram Auto. So you can just see for when in 2018 when Shriram Auto was with Shriram, um, some numbers that I found out was, so yeah, so they did a revenue of about 105 crores, right? And a profit of 20 crores. So today, it's nearly 300 to 350 crores is the revenue. And the profits are also multiplied, right? So it's a great, so there is a, so they bought that for a few hundred crores. And so that also would have multiplied, right? So 100 million for car wale, bike wale plus Sriram, right? Plus 800 crores. Plus you get all the upside of the things that we spoke about, that spinny kind of product and the bank financing and so on, right? So I think it's quite cheap at today's price if you think about it that way. And it's just my 2 cents.
Yeah. Nice to know about it. So see, the idea about discussion on this forum is not to recommend anything, but as Gautam, we were discussing this earlier. So you had your view, and we respect your view. And then we have a view from Vikas who says that at this point of time, it is probably much cheaper, right? And then we have the view. We have already discussed the view of some of the other market participants in the opening slide, like how other people are looking at a company like CarTrade. So I see Amar raising his hands for a long time. You can go ahead, Amar, and then I'll come to Kailash. Amar, please go ahead.
Yeah, Ankit, my question was around, see, in the slide when we looked at the two other competitors, they are asset heavy, and that is where their most of the expenses coming, right? So
Right.
what is that CarTrade has cracked in terms of like, see, I understood that there's a franchise model where somebody else is doing the heavy lifting. But then when we are doing heavy lifting, what is the ROI for them and where means is that part I'm not able to understand. Means how does this CarTrade make that work in its favor?
So look at it this way, Amar. So I know a few. So I've even interacted with two car dealers, one in Ahmedabad and one who is the biggest car dealer in Kutch, Gujarat. So let me share their current business model, how they work and how they have been working for last say 15, 20 years. So they have a very scattered, unorganized market wherein randomly they get uh, uh, old cars from consumers, and then randomly they get buyers, and it's very difficult for them to match both of them. And there are times when they have to carry on different inventories, or there is a limitation. So as an individual car dealer, I would be very it would be very asset heavy and difficult for me to carry say 50 cars in my books, because I don't know when the right buyer for each and every car will come. But when I as a dealer become a part of say CarTrade, they are providing me the exchange wherein the buyer and the seller will get matched, and I am basically just being a facilitator. I have the inventories ready. So the main heavy lifting which I had to do in relation to matching my buyer and seller, that to a very good extent will be done by CarTrade exchange. And it would be, so sometimes what happens is you are present in Ahmedabad and there is a demand in say a place which is 100 kilometers or 200 kilometers from Ahmedabad, but you don't know because you are you have your physical incapacity to go there and see what is the demand. But CarTrade will provide you that, and you will be able to reach there and then sell it off. I hope you could understand, or you could I could satisfy your questions.
Yeah, it makes sense, Ankit.
Yeah.
So one advantage of this whole webinar for me is instead of looking at as a used car kind of sales body or something like that, then I have to look at it more as a platform based.
Exactly.
Yeah. So where now I can see the transactions rolling from, which will have a take its own life over a period of time, where the
Right.
scaling will come into play. So when I look
Perfect.
from that
Yes.
perspective, things change.
Exactly.
Yeah. Thanks, Ankit.
Thanks, Amar. Say yes, Kailash. You have been raising your hand for a long time. Please go ahead.
Yes, sir. Actually, it's quite, enriching. So my question is, sir, basically there are two questions. First question is, sir, regarding this, board, what you said, actually, it is not comprised of competent, actually, if I had to look at the shareholders, like 18% is being held, by the small, shareholders, and 2% by Sangvi. So 80% is being held by the who's of the world, those who really understand each and everything. So still you are not convinced actually with the kind of the bandwidth, of the management is. And I, actually Ashwath Damodar has two things actually. One is numbers, another is narrative. So I'm a narrative person. I don't understand the numbers, but the other income part that you told, if the company remains there actually, or follows its stance, even if it's not ethical, or it's doesn't come into the moral of anybody, even if it's continued, so how you will rate that stance of being arrogant and being wrong? So actually one point, that is one question. And another question is this used to new car ratio, actually that is quite low in India, and they don't have any actually income and any actually right now actually from used car, and they are getting into this franchisee model. So So because as the economy grows, as the per capita income grows, the tendency to change the car actually, actually increases. Because actually, I have to take my example. Actually, I never used to, think of anything like this. But right now, after 5 to 6 years, I think of no, actually, we should get rid of this and actually go to the. So the ratio that 1.5 is, and compared to other countries, maybe 10, 10 or 20 or 15, China was 21 something. So that was due to the increase, per capita kind of a, GDP income. So how that thing, the used car segment, actually, I want actually your views on actually right now they are not into that, but actually how that can pan out. And another point is that actually the promoter stance on this other income and actually, and on the bandwidth, those the marquee investors are unable to figure it out actually, something like that.
Sure. So, Kailash, first of all, the coming to the point of the promoter thing and the other income part. See, our job as investors are not to give any certificate to the management or the company that you are A rated or you are B rated. Our job is to find out whether. So, what we do as in SmartSync services, we have this tendency to publish 5 minute stock idea report where we don't make any recommendation. But what we do is we, on left hand side, we write all the positives, and on the right side, we try to write all the negatives. So you will never find a perfect company. Even the best of the best companies will have some sort of a problem, right? So your idea is always to weigh both the positives and the negatives, and then look at the valuation and look at the future opportunity, and then try to not take a very what you mentioned about the numbers and all. It is more of a subjective call after going through all these numbers and all these positives and negatives, whether you want to go ahead or not. So that is a very subjective call you take. So I don't think this just for the sake of example, since you brought this up, the other income thing. Of course, they should not have included that as an EBITDA. It should not be, but this is not something which would concern me whether I should invest in this company or not. If I would want to invest in this company, I would see this as a non-event, whether they have included that thing in EBITDA, because anybody can make out what is the nature of that income is, and it doesn't matter too much. Okay, and it is very clear, and since people ask on the call also, then also you become more and more aware of it. What is the nature of income that is, right? And in terms of promoter percentage, see, all these startups, they have this, they all go through this period where they raise a lot of capital from outside investors. So it would be reasonable for us to expect a far lower promoter percentage in case of a startup compared to any kind of a traditional business, because traditional businesses are generally built and scaled through owner's own capital, and that is why the whole majority of the stake is being retained by the owner. But in case of startups, they start and grow through outside capital, so they have to part with their own equity. Otherwise, they'll not be able to grow, right? So that was about the first question, and the second one was related to
used car, a used car, the ratio actually, the India's ratio is too low, and actually that may rise exponentially.
So used car, see, part of your question has already been answered by Vikas wonderfully. So I'll just repeat some of those things. Is that first of all, used car as a percentage of their business is currently very low, but this is an opportunity. This is one space which has a lot of opportunity, because a lot of us actually would want to buy through online platform seamlessly without any kind of friction, because it is a lot of hassles. So if you ask me personally, I have had 2-3 occasions where I sold my own car to a dealer, but I was not so comfortable buying a used car from the dealer. But if there's a platform which gives me all those certificate and all these process getting done in the right way, I would probably trust the platform more than the dealer, because in the past I have heard of many stories and many cases where the dealers had their own incentive to hide some of the problems, right? So that way a process like this through the platform has a lot of positive tailwinds, and it should ideally do well. It's very difficult to pinpoint as to what would be the growth rate, but it is fair to assume that today it's a very, very, very small compared to what's the potential of this market is, right?
Okay. Thanks a lot, sir.
Thank you. Yes, Gautam, you had some questions.
Yeah, I have really some questions. The first thing is, I just saw Sangi has in fact reduced his stake very little. Second thing is the point you mentioned, right? See, personally, I probably might want to buy a car from True Value Cars of Maruti than some online platform, because I see what I get, right? Because they also offer some warranty and all that, you know. So
Right.
yeah, I have a difference of opinion there. Second thing is, even before COVID, auto sector was not really doing great because of so many reasons. Because of clarity, there is no clarity in BS6 norms or whatever, or general economic slowdown. And you know what happens, right? There is a narrative in Netflix, right? The stock has beaten down because they're not able to add the subscribers, right? So the market obviously accounts the growth in the future. Second thing is the Ola or Uber, which are marketplaces, they never really made profits. Okay. And also, I'm not sure how this EV play will come into in the future, how it, and the fuel costs generally they are going up, and that is the major cash cow for the government to make money, because they have to tax the rich, right? So even though the oil price globally corrects, but still the taxes they cannot do away with. And also a lot of metros, even tier 2 metros, are coming up with a lot of public transport, and people are getting aware of using the what use them, not using fossil fuels, right? That awareness is also going up. So people might want to switch to cleaner fuels. And also new employees, what I've seen, younger generation, they believe in the gig economy, right? They prefer to hire than own a car. And recently I saw even Maruti is coming up with some model where you just own a car for 1 year lease model, right? They're aggressively marketing. Maybe it was there earlier, but I was not aware. So I prefer to change a car, because some things you cannot change in life, but cars and mobiles probably you can change in your life, right? So why I should buy a car and keep it for 5 years, 10 years, right? So I can just lease out, and there are certain benefits with that. And yeah, and also the cash component, I want to say, like, I don't know whether these platforms have some taxes, like maybe service tax, 18% GST or whatever. So whether that can also play spoil sport. So these are some of the points I have in my mind.
So Gautam, you raised a lot of points, and I'm actually confused as to what is your actual question.
No, I'm just saying, see, when you're talking about so many things, see, because all these factors confluence and brings, that's where the efficiency brings, right? The market factors, all these, there could be so many other factors, positive and negative factors that we are not aware. And we cannot blindly think that there will be growth because it has grown 100 crores to 300 crores. It cannot be forever, right? There could be disruption. And see now what Bhavish Agarwal is concentrating on. He's worked like last 5 years or 10 years, he worked on something, but now he's getting into some other areas, right? Now he's bringing Ola car factory and all that, right? Who knows? Like, and people are buying his electric scooters, right? So people might be buying, their cars also, electric cars. Then who will get affected? Auto sector, right?
Right.
And all, why Hero Honda and all, so many these auto sales stocks, of course now Maruti has gone up for some reason, but all these are correct. There is a reason for the correction, right?
Right.
So obviously there is something that we don't know.
Sure,
For
Gautam.
me, yeah, I listen to you, I listen to Vikas, I listen to others. I get I form some opinion. I also understand how the value investors like to think. And that's the game, right? We are all part of the game that being played out in the market. So yeah, I probably buy, but my position size will be based on the price. Ultimately, I believe in price and price action, not fundamental or technical analysis, right? And then if Nestle has corrected, if Bajaj Finance has corrected, if Infosys has corrected in the past, there is a reason. We know all that. Right. It is not always the valuation. It is not always the fundamental or technical analysis. There is much more in the play.
Right, Gautam. Sure. Thanks so much for your views and suggestions. So, Amandeep, I see your hands being raised. So, you can go ahead.
Yeah, thank you, Ankit. So, as always, really nice presentation, well researched.
Thank you so much, Amandeep. I can't hear you properly. Can you be a bit louder, please?
Is it better now?
Yeah, much better, much better. Thank you. Please go ahead.
Okay, so basically, I had 2 points. One was on their core business. So, if I understand correctly, most of the companies, most of their competitors in core business are already have been losing money for quite some time. Now, I have one colleague who previously worked with Droom and in their product management department. So he provided me some insight a few months back. So basically, his point was because of so many reasons, be it the car making decision is complex. So you generally, the person consult with other family members also. That's one part, right? It's a monetary, it's more, it's as the decision becomes more expensive, you are much more careful. So you want to see, visit, feel the thing. So there are a couple of things, these things which come into play. That's why people have been skeptical in buying big things, expensive things over these platforms. So that's why these companies, first of all, what he told me was it has been difficult to attract the customer. That's why a lot of subsidizing has been happening. Now, so that market has grown. I think I don't know how exactly the market has grown, but then there is a lot of competition because there are a lot of players here, and everybody has a lot of these. They're funded by big guys, right? So they keep on burning money. So in their core business, we still, I mean, it's difficult to foresee when exactly they would start throwing cash flow and who will be the big player. Because the thing with network effect businesses is that not too many people are able to exist in the end, right? There would be only few guys. There'll be a lot of competition. Some will die. So that part, I mean, still I'm not able to see. That's just my opinion, as the other guy said. The other thing, I studied about Copart a few months back. It was comprehensive 20-30 page report. This business has been existing for 50 to 70 years. They moved from traditional auction to they moved the complete business model online. I think it's a really good case, and they have been extremely good capital allocators making free cash. I think they have been profitable consistently throughout last 20 to 40 years. This company trades at around 10 times price to sales, 30 to 40 times PE, and it has been still growing. Even in developed market, it has been growing 10 to 15% consistently. So seems like there could be this kind of business model could exist, and it is extremely strong in some of the states in US, and it is only player in some of the state. The other thing they have done is, so it's a junkyard. So in US or in developed countries, there are designated places for junkyard. They have bought these junkyard. So if somebody has to, if somebody has to sell, they will have to sell it to only them, because otherwise he will have to go to other state. So that has given them additional competitive advantage. So, I mean, if you read about this company, I'll share the report also with you, and maybe if you want to share that, you can share with other folks also. So a company having
you can share it on
50
Slack,
years of, sorry?
Everybody. You can share that report on Slack. Everybody will be able to see.
Yeah. So a company which has more than 50 years of successful business history, I think it's third or fourth generation, and it has a lot of other revenue streams also, as we are doing, as this company is doing. And apart from it, there are some more deep competitive advantages that it has been able to do because of owning of these junkyard, those kind of things. But still, I mean, it trades at 30 to 40. So valuation wise, I mean, that could be a benchmark for us, for example. I mean, and so these are the two things that I wanted to share, because right now I heard Vikas' point, but the thing is that so for us, the data point has been the private transaction value, but it is all a function of, I mean, I work in a startup. I see it's a function of sentiment also. When the things are really, really rosy, valuation could be extremely high. Suddenly it could drop really, really sharply. So the perception could change, and that private transaction, maybe in future it could totally changed, right? So we have seen a few companies being bought by Reliance extremely cheaply, the startups which were Urban Clap, or I don't know which one he bought. So their startup, he bought it for 1/4 or 1/5 the price. So I mean, personally, from the core business, I still see that I don't know when it would start making profit. Second part, maybe we can look at Copart. Also, it would give a really good understanding on how to value this kind of a business. I'll share the report.
Sure. Amandeep, see, I think you touched a point. If I could understand your point well, you touched upon 2 points basically. Number one was how do we see this business growing? So, as in,
yeah,
specifically
profitability part in the core business.
Right. So, core business, if you see right now, so we have, first of all, we have examples in the US market and the Australian market. So in the company which we discussed about, the car sales company, which is an Australian company, it is also a marketplace company, and it is actually growing really fast. So the point which you mentioned about people would like to go and have a touch and feel, see, these are things which I think are changing with time. We earlier thought that we would probably buy books online, but we will never buy a phone or a shirt or a trouser or a pair of shoes. But now everybody is booking those online. So it's just about time when the society just raises their bar and even go for a higher ticket item also. And Vikas himself is an example here that he bought a used car from a platform, right? So the demand is there, and we are not trying to predict how fast it will grow, but this is something which will definitely grow. The speed is debatable, but we have the international players as evidence that this is not something which we are just shooting in the dark. This is something, a business model which is actually have been proven somewhere, and there is a high probability that it will be successful here as well. Now, I take your point. It is difficult to know today who will be the survivors, and as platform companies have this power law where the winners take it all, like we see in the Uber and Ola have the whole market share. Similarly, here also the same thing will happen, say 5 years, 10 years down the line. But let's reverse that question. How can CarTrade fail? Let's reverse that question. Rather than who will succeed, let's look at CarTrade and try to ask this question: how will CarTrade fail? So CarTrade will fail when they stop earning in all the three verticals, major verticals. One is the SAMIL, the other is the used car, and the third is the new car. But even if they stop, so first of all, what are the odds of not earning or not growing their earnings in all these three, which have already grown in the, so like even in the current quarter, when the automobile business per se, we all know about the automobile industry, which is still not out of the woods, they have shown growth in their numbers, right? So first of all, for them to fail, you would have to assume that they will fail in each of the three business for a sustainable period of time. Then only they will have some sort of a cash crunch compared to the competitors they have in the field. So that gives us some comfort there. Okay. And then coming to your next question, what was the question, Amandeep? I forgot.
It was not a question. So I was basically saying that we can look at Copart model and this history to understand. Yeah.
Yeah. So I had a point on Copart. So the Copart model which you're talking about, that's in fact a very positive thing for us, in the sense that probably if Copart has done well with that kind of a model, so probably that gives us more comfort that this SAMIL business will grow from strength to strength from here. And abhi tak to, since 2000 till 2018, everything was done completely offline, and probably integrating online business has led to the sharp rise of their revenue from 100 crores to more than 300 crores in the last.
इसमें एक difference है. Yeah, Ankit. So there's just one difference here, which is that Copart, I think, if I remember correctly, ये third generation है अभी business में. So पहले ये 20-30 साल तक traditional mode में थे. So they already have trust. One of the most difficult part in a network is how do you build trust? How do you trust Ola, Amazon, all these companies with money, right? So
how long is Sriram in the used car business?
no, I'm saying the same thing. I'm saying the same thing. So in the auction business, they could be like really, really strong, but for the other things, let's say revenue streams, they might still have to. It's difficult to see. So in case of Copart, because people used to already know the company, it existed for so many time. So that's why it was comparatively. Let's say I don't know. Maybe it was comparatively easy. It's the same company, just changing the model. So we can trust this company.
Right. The same thing works with Sriram also, no? So Sriram has also been in the used car and used vehicle business for so long. The Auto Mall has come in 2011, but prior to that also Sriram has been it is one of the most respected group in this field, and I think it is more than 20-25 year old today. In fact, more than that, I would say. Right. So
Thank you, Ankit. Thank you, Ankit.
Thanks, Amandeep. Good questions. And Vikas, you had some other questions or points?
Yeah, Ankit. So, Amandeep, first of all, please do share that report. I'd be quite eager to learn about Copart. So the thing that I wanted to share was that this used car business is actually a very difficult business, right? Um, so, for example, you think about how the buyer and seller transact, right? So there is usually that information asymmetry between the buyer and the seller, right? So the buyer really, that's why you need to, unless you know about cars, it's very difficult to, you just looking at the car, you might not be able to catch all the problems, right? And people who don't want this kind of information asymmetry will usually end up buying a new car, right? Like I said, like I described my experience, I have a severe handicap as far as the car is concerned, right? I know how to open the bonnet, but uske baad, my son asked me to explain things, and I don't know. I don't know how it works, right? So there is that information asymmetry between buyer seller. Has a car been in an accident? What is the effect of that accident? Is it a minor scratch or is it something bigger? Right. So there's that information asymmetry that is there, and then there is that price asymmetry. You don't know what is the right price to buy for a car. And see, if you think of cars as commodities, we don't have an exchange which will tell you a real time value of that car. So you don't know whether the price that you're paying or the price that you're getting is that the right price, right? You have to go with some benchmarks, right? Then there is the capital intensive part. So a dealer who buys your car, he's going to take that risk on his books, right? So he's taking certain risks there, and therefore he will pay you a lower price. On the other hand, the model could be that you park your car in his lot, and when your car gets sold, you can take the price, but you will have to pay him some commission. Um, but there is that capital intensive nature of that business. And the fourth biggest thing is it's unorganized, right? So you walk into a dealer, and I totally dislike that whole experience. He will shout at Chotu, and Chotu has to bring the car, and all of them will sing praises about the car, and you don't know what to believe, what not to believe, kind of a thing, right? So that is where, so there are a lot of these problems in this whole buying, selling, uh, uh, and in the used car thing. And so therefore, I like a player like this who has kind of figured out a lot of things. So the information asymmetry and price asymmetry, they say that we have so much data on our with us that we can actually provide you a sort of indicative price for each of for the used car thing. The capital intensive thing, they are not taking anything on their books, right? And that somewhere they mentioned that we are trying to digitize the whole car buying experience, right? So that
Right.
will remove a lot of this sort of doubt and bring in more trust into this process, right? So this is actually good that it's a difficult business, and therefore that is why you see so many of these other guys burning cash trying to figure out some of these things that we talked about. And this guy has figured out things and he's not burning cash like them. So that is like a big advantage that CarTrade has. Again, views are biased.
So because I was reminded of one thing which we forgot to mention in the presentation. So I don't recall correctly whether it is Car24 or Car Deco. They are now also present in the Australian market, because see, you're not even making money in the Indian market and then you are expanding in the other market. That also tells a lot about your strategy or the kind of problems you are having scaling up that model in India, right? I don't know whether it is Car24 or Car Deco, but one of them are doing in that way. So it is definitely a very difficult thing, and that is why you see in the used car business they are getting less than 10% of their total revenues from the used car business. So they are slowly building that up, and let's see how it goes. And regarding that point, because I'm sure there are many people like you. In fact, I also fall in the same bracket where I don't understand too much about car, and I would rather trust a system like this platform rather than a random dealer, right? Yes, Karan, you had some point.
So I just want to add at the end that this I think the major point that Vikas is trying to make is that everyone is like, because of the information asymmetry, everyone is craving a standardized experience. Like say for example, you wouldn't be trusting for big ticket items like say jewelry. You may not be trusting like say a local jeweler compared to like say Tanishq or Malabar or someone who has a proven history of providing a standardized experience as well as value for the customer. So something like that is would be the, I would say, the basis for anyone who is trying to convert a whole market from unorganized to organized. This works similarly in like a lot of places, right? Like say even how VIP is doing in luggage sector and otherwise. And one thing I wanted to ask, I did, like I was not able to follow the whole webinar completely, but what are the like say chances of consolidation? Because I think Amandeep mentioned, right, because that at the end there would be very few players. So within that, what do you think are like say CarTrade's chances of like at least staying present or having a meaningful play? Like say not even as like say a standalone player, maybe they get merged with CarDeco or something like that.
So, Karan, excellent question, this one. So, first of all, in the new business, you already see it's a consolidated market. So there are only two players forming 90% of the market. CarDeco has a 50% market share, and CarTrade has 40% market share. And in case of the used market, I think the kind of dynamics it is right now, it is very difficult to say how the market will consolidate. Definitely, some of these competitors will run out of cash and they either get merged to some other competitor or shut shop. That is very difficult to say as of now. But it is fair to assume that consolidation will definitely happen at some point of time. But right now, the kind of the market is in such a nascent stage, and the kind of patient capital these guys have in terms of the VCs continuously pouring in more money. I would not be surprised if this continues for a longer period of time before that consolidation happens. Yeah, Amandeep, you had another question or point? I see your hand raised.
No, I don't know how to unraise.
No problem. No problem. So Amar has raised a hand. So Amar, you have a question?
Yeah, Ankit, yeah, I need some help from you. When I look at the shareholding pattern, when I go to screener, it gives
Okay.
me like FI 17, DIR like 7, and 75% is the public. That is the snapshot I got. So promoter effectively becomes zero, and I understand that when they say public, within that there will be some heavyweights. But this whole thing looks a bit skewed, right? What is your take on that?
Just a second. I'm just opening the screener and sharing it with all of you so that it becomes easier for everyone to follow. So can you see the screen?
Yes, we can.
So yeah, what was your question?
Yeah, usually I look like a major part with the promoter, then some FIDI, and then usually 20-25% with the public.
Right.
Here
Right.
it's the other way around. The promoter has gone missing, 75% with the public. That is kind of throwing me a bit off balance. So I'm trying to understand how to interpret this data.
So see, you can see Vinay Sanghi has a 2% stake here. His name is showing up there in the public segment, right?
Correct.
So of course, uh, just like traditional business, you won't get a high promoter share holding in a high tech business which has grown through outside capital, right? But so even if you look at companies like say Infosys, they don't have any promoters. Infosys also has no promoters. If you go and check the Infosys stock on screener, I'll just check for Infosys. I'm sure they also don't have any promoter.
Yeah, I think this was very famously recorded in Paytm's case, right? Because like Vijay Shekhar Sharma was not registered as a promoter
Right,
of
right.
Paytm. Yeah.
So I don't know whether this is a problem or this is something which we need to worry about or not. If anyone has any view on this, please share your views.
The promoter
Yeah,
has reduced his stake, right? Which is a concern.
Sorry?
The promoter reducing his stake is a concern, right? Whatever little he has.
Promoter reducing a stake.
It might not
yeah,
be reduced. It could be because of the ESOP. It could have gone down slightly.
Yes, yes.
Exactly. So
and
if you look
also
at
hmm, yeah, I would like to add one thing is that like in most like obviously a lot of startups would not be having their founders as the core promoters. I think Nika was the only exception in the startups that got listed where the promoter had more than 50% stake. But in a lot of the platform players as well, like say Policy Bazaar as well, the founder had only like less than 5% stake. So this is, I think, slowly becoming a norm, as in like the more people the founders are using outside capital, the lesser they will have. But it wouldn't, I would say, it wouldn't dilute their influence on the company because everything or even the external money has come on their vision, and they are supposed to be like running the company unless something very bad happens and they are completely removed. uh, the company should continue, and even if there is a very less chance of them getting removed as well, I think, because like they are the ones who are responsible, even the big VCs and all are putting money on them, not on the company itself when they have put the money in.
right. Thanks, Karan. So Kailash, you have a point or a
Sir,
question?
actually, one thing that is quite intriguing, sir, actually, the vehicle penetration in India, actually, it is 22 cars per 1,000 people. Actually, in US, it is 750 cars per 1,000 people. In Germany, actually, it is around 600, cars, actually, per 1,000 people. So this
Right.
all talk of, that vehicle, penetration and everything, and with the rising GDP and rising per capita income. So should we say that actually the signal is quite clear that the ownership is going to rise and rise? Just actually heard that Tesla actually sold actually 4 lakh cars actually in China market alone, whereas actually India's combined, I'm talking about Audi, BMW, and Mercedes, they sold only 40,000 cars. So it's a simple thing. What I'm trying to ask is that actually is the signal is clear that the this new car, that the revenue they generate from new cars. So a lot of dealership may come up, or a lot of new, actually manufacturers, OEMs may come up actually in India. So the ad revenue, actually, I'm talking about the ad revenue and penetration of the market. So last word actually on that actually from my behalf. Actually, I'm assuming it's, we're already running out of time. So.
No, there's no problem. We are ready to take up as many questions. अगर आप अकेले भी रहोगे last तक तो we'll be answering your question.
so vehicle penetration, sir.
So vehicle penetration, see, there are two ways to look at it. See, if you look at India market and compare it with China and US, in each and every field, you will see India is under penetrated. Be it AC, be it car, be it any other appliances, be it real estate, owning homes.
No, sir. Shall we assume that's a long runway? Shall we assume it's a long
Yeah.
runway?
So be it mutual fund, everything. So there are reasons. There are very good reasons why India is under penetrated. So one reason is lower income levels. So India has, in terms of per capita income, India is nowhere close to what US is, or maybe what China is, right? So just because India is under penetrated in all these categories, be it car also, it is not wise to assume that everything will shoot up immediately, or it cannot stop. It will definitely go rise. There are other factors which also need to do well, but given the status of the economy, given the demography we have, it is fair to assume that we will have far many millionaires in India over the next 5-10 years than what we had in the last 20-30 years. So that also gives us some comfort that probably the rate of car ownership will also increase. But having said that, due to the advent of Ola and Uber, there also would be a lot of young population who would probably not want to own car. So how these two different or the divergent views converge, and what is the outcome of that we'll figure out and see in the future. But to say in one sentence, there is a high chance that the volumes of the car ownership per person and the car ownership per household should ideally move up from the current state as of now.
Thank you, sir. Got it.
Yeah, I was just after Kailash's question, I was also looking up, vehicles per thousand in the world on the wiki page. So I noticed that a lot of countries who are above India, who are not as rich or even like close to India, like Sri Lanka and all, have numbers close to like say 160, 170 cars per thousand. So as such, I think like even if India does not reach USA levels, at least it can at least easily like go 3-4 times above, right?
Right.
That.
Right. Chalo, any other question? Anyone? It was a very good interactive webinar and some really good points from all of you. So Gautam, Amandeep, Vikas, Kailash, Avdut, Amar, some really good points. So we really enjoyed discussing.
Ankit bhai,
Yeah.
One question: at operating cash flow, are they positive?
I'll have to check. I suppose they are positive.
Okay.
I have to check it, but I think they are positive.
Okay.
Is this something, Ankit, which we can check using the screener data points, or is this something you will have to go through the balance sheet and kind of do some financial jugglery?
I by the time you were saying, I just checked on screener. They are cash flow positive.
If you can
That
just
figure
run us through
looks very
quickly
low.
that, no,
That's
Ankit.
Sorry?
If you can just run us through by sharing your screen, what do you look at? Because I don't know that process. How do I look at it?
Can you see the screen now?
Yes, I can.
So this is screener. This is CarTrade Tech. This
Yeah.
is cash flow. I'll go to view consolidated, and you can see cash flow from operation. It is positive 35 crores. I'll just click on the plus to see how it goes. So you can see there is very minimal working capital intensity. So whatever profit from operation is there, it gets added up to the
Cash flow.
This is what their total cash flow from operation is, 35 crore. Now, one thing which you have to see is there has been no taxes paid.
Direct taxes have been paid.
Yeah, so that is something we have to see how the taxes go on in the future years when they become more profitable. But as of now, it is cash flow positive.
Okay.
Got it, Ankit. Thanks.
Yeah. Any other question from anyone? So it's
One
8,
final
10.
question. So
Yeah,
how
Gautam,
can
please.
this EV, electric vehicles can affect this, this used cars segment?
Very difficult to say at the moment, Gautam. I don't have very clear answer to this, but I suppose currently EV is at a very, very, very nascent stage. Nascent stage in the sense that in India uh, to see EV vehicles, in the sense I'm talking about the EV cars, to really ramp up, you need to have a very good infrastructure, charging infrastructure, which is still not there. And it is anybody's guess how much time it will take. And even if EV comes in with full force, uh, the old engine cars or the combustible engine cars is not going to go away immediately. Of course, they are going to decline. But when EV cars come, even they will they will be a part of the used market as well. So why I don't see any threat in that sense. That car will also become a part of the used car market, right, Gautam?
Just to add to
Yeah, hi,
this,
Ankit.
Ankit, Ankit, just to add to what you just said, there is another website called Cars Guide in Australia, which offers people options to buy second-hand Tesla. So even in EV, there are platforms which are giving the options to people to buy even the EV segment cars also. So I don't think this will. Yeah, somebody saying something?
No, please go ahead. Please go ahead.
Okay. Okay. So I think this will add to the market only, overall market that these guys will be able to cater in future.
Sure. Thank you. Very good point, Akhilesh. So
Yeah, hi. Lastly, I would like to add here is that, like say, the used car market would only be cornered unless, like, when there law comes in by the government saying that, okay, you cannot use cars which have like at least this much emission level, because below that, like, cars are running any days in India, and like unless there is something enforceable, I don't think people would be like say switching directly to it, because and one fundamental problem of propagation of EV in India is that India is a very price conscious market in terms of volumes in automobiles. So that's why, and like even Tesla has not been able to lower the like its lowest model to the average price at which a Ford petrol is being sold. So that is a big stumbling block in, like, say, propagation of EVs in India. This is, I admit that this is not going to be, like, say, a full stop on the EV thing. EV thing is inevitable, but it would only like lengthen the process, and the used car market with fossil fuels and CNG and so many other alternate fuels will only grow deeper as a result.
good point, Karan. And I am reminded of the recent calls, also Maruti saying that they have actually geared up with their CNG cars. So probably between diesel and EV, there will be a huge runway for CNG cars. That will also add up to your used car market. Right, Gautam?
Okay.
So I see a hand raised by 2517. I don't know your name. Please introduce yourself and ask the question. You are muted. Please unmute yourself.
Good evening. Thanks for the nice discussion. I would like to know what's the difference between a true value, market true value platform and this one.
First of all, can you please introduce yourself? What's your name?
I'm AP Ganesh Kumar.
Okay. Hi Ganesh. Hi Ganesh. Yeah.
So thanks for the in-depth discussion. But I would like to know what's the difference between a market true value platform and this one.
Sorry, I didn't get your question. Can you repeat again?
Maruti True Value has been in this business for a long time. Maruti True Value.
Okay.
Maruti True Value.
I have very limited knowledge. I don't know about that platform much. So please give me some time. I'll try to look up on that and get back to you.
Thank you.
If anyone else has any idea about Maruti True Value, you can.
Ankit, this is Amar. My take on that is Maruti True Value is something like Mahindra Rise. It is a physical kind of system. It's an old and archaic. It will not be a platform-based system. So it will have its own challenges like a used car market, the example you told in Gujarat buyer and seller, right?
Right.
So those drawbacks will be there. It is not a digital platform.
Right. Thanks. Thank you so much, Amar. Thanks.
Thank you. Thank you.
Yeah. So thank you so much, everyone. With this, we come to the end of the presentation today, and let's hope for more and more such presentation in the future as well. If you really like the presentation, we would request you to kindly share about it on Twitter, tagging our SmartSync handle. Thank you. Have a nice evening and have a good weekend. Bye bye.
तो आशा करता हूं कि आपको ये वीडियो जरूर पसंद आया होगा। अब बात इंपॉर्टेंट ये है कि अगर आपको ये बिजनेस अच्छा लग रहा है तो ये जो वीडियो आपने देखा है ये आपके रिसर्च का एंड पॉइंट नहीं है बल्कि स्टार्टिंग पॉइंट है। तो वीडियो तो 2022 जनवरी की है, 3 साल पहले की। तो आप नेक्स्ट स्टेप आपके लिए यही होगा कि डिस्क्रिप्शन में मैंने जो एक ब्लॉग पोस्ट भेजा है उसमें काफी डिटेल में हमने ये कंपनी को कवर किया है इन द ईयर 2023। उसके बाद भी मैं आपको ये रिक्वेस्ट करूंगा कि आप आगे के कॉन कॉल्स, एनुअल रिपोर्ट्स, मैनेजमेंट के इंटरव्यूज वो सबको थोड़ा और देखिए और अपने आप को अपडेट करिए। प्लस आज के दिन का जो कंपनी का वैल्यूएशन है वो भी सेम नहीं है जो 2021 या 22 या 23 में हुआ करता था। तो आप जरूर देखिए। और एंड करने के पहले मैं ये जरूर बताना चाहूंगा कि as a SEBI registered investment advisor, we will like to make a disclosure. I am invested in the business. I have recommended it to my clients. My views can be biased. So don't base your investing decision only based on this video. It is not a recommendation to buy or sell. Consider it as a educational video. इससे साथ ही मैं आपसे आज्ञा लेना चाहूंगा। नमस्ते।